Giving the view on Business Sweden's and my team's view on the global economic outlook right now, looking a little bit into how it looks like in different parts of the world, what risks do we see, what kind of scenario do we paint right now, and also look a little bit deeper into Business Sweden's Export Managers Index to see what the Swedish exporting companies say about how it looks like today and a quarter ahead. So that's my plan. And look at the global economy. I truly believe that we have the worst behind us. So that's the good news. But on the other hand, we all know that the registered COVID-19 infections, the number of the infections are increasing in quite a lot of countries, not least in Europe. And we don't know actually how this virus will behave onwards and what it will mean for different economies. Do we need to go back to have more restrictions again and even shut down parts of societies? Hopefully not the whole societies as we did in many parts of the world during the springtime, because we know that this will have a very, very severe negative effect. And if we will have a second wave, we will look into this in a scenario, then it will really hurt the global economy, and not least small open economies, like, for example, the Nordic ones, Sweden, and other small open economies, not least in Asia as well. So that's, of course, the bad news. But hopefully, we will handle the situation in a good way. So that's our baseline scenario, that we will muddle through this during the autumn with less of restrictions, even if there will be in some markets even more than we have today. So what does it mean for global trade? I don't know if you have seen this picture graph before or some similar, but what you have here is the global trade, global export, and on the left-hand side is an index, and I have put it on 2010 at 100, so then you can see if the yellow line, the graph, is above or below, so you can just compare to 2010. And now we are, if you look to the right-hand side, looking to the yellow, just the yellow line, we are a bit above, but not that much. And to the right-hand scale is actually the bars, where you can see the percentage change. So I think we should look at the bars. Go back to the dot-com crisis in 2001. You can see that if we look at the percentage scale, you see that we were below zero, not that much, but trade fell. Financial crisis, 2008, 2009, you see that it's negative and a fall in global trade by approximately 15%. And then we look to the right-hand side in 2020, where we are right now, and then you can see that we are below zero again. And just look back 2019, we saw that there was something going on. So we started off the year with a volatile situation, but we thought that we were in the right direction. And I will show you this when it comes to the Swedish Export Manager Index. It's quite interesting to see how it can change quite fast. So this pandemic had now put global trade with a minus of 11%, so almost what we saw during the financial crisis. And trade is, of course, important for many countries and our global welfare. So that was just to show you, and I don't believe that we will be back during this year, even if we gradually recover globally. I don't think that we will be back on the level we had in global trade before the crisis or the pandemic started off. So not at the same level as in 2019. So that's the trade, and it's of course bad news, but moving in the right direction right now. This is a lot of figures that you have when we look at the GDP. It's our GDP forecast. We published it last week. And as you can see, we expect 4.4, minus 4.4 for global growth this year. But a quite strong rebound already started off. So we have plus 5.7% next year, which means that globally we will recover and be back on a level a bit higher than we had in the pre-crisis level. However, you can look at the different regions. We have forecast, if you look into our report, you can see for different countries. If you don't find countries that you are interested in, please let us know, because we collaborate with Oxford Economics and use their global model, so we can go into all countries actually. But look at Europe, for example. It's hit more than most other regions, and not least in the southern part of Europe, like Italy, Spain, Greece, even France. I think that Spain is the one who is hit most by the crisis, both when it comes to the health situation and the spread of the virus, and when it comes to the economic situation. So hard for all these countries, in particular Southern Europe, because they already have very high public debts, and European Central Bank have already done whatever they can to support the economy. So you can question if you can really use the monetary policy with a bigger effect on the economy if you need to stimulate. Of course, you can go further down with negative interest rates, but I think you can question how much effect will this actually have on the economy. So fiscal policy is even more important, of course, to do it in the right way, so you really support and stimulate for long run sustainable growth. And Europe, as an example here, you see that it's minus 7.3 this year, plus 5.7 next year. So Europe will not recover during the next year. It will take another year to recover fully within Europe. And it differs, of course, between different countries. And then you can see, like North America, before summertime, we actually expected North America, driven by the US, to be at the same level as in Europe. But the US labor market is actually so dynamic and surprises us on the upside always. It's the same this time. So the labor market has already started to recover quite rapidly, which means that people go back to work, and activity is increasing quite fast right now. So that's the positive thing with the US economy. In the longer run, we don't know, because they have other things to struggle with, and their expenditure ceilings and all this. So, but at the moment, it's performing quite well. And Asia is ahead, of course. China, Vietnam, and a few other markets as well. We'll even have positive growth on an annual basis for this year. Most countries have started to recover, so they will have positive growth the second half of this year. But on an annual base, they will have a negative growth rate, but not in China. It will be about 2% plus, so a growing economy. And in total, we will see minus 2% in Asia as a whole. And then you can look into the other regions as well and deep dive into this if it's of value for you. So I continue. We calculated a recovery rate. We call it an economic recovery rate. We compare GDP levels in 2021 to 2019 to see if the economies will recover fully or not. So the ones that will recover during next year is painted in this dark orange color, or it's not red, more orange. So 100% or more. And 40% of the countries globally will actually recover fully, or even more, as you can see on this map. And we have to wait until 2022 until we have 80% of all countries recovering. But there are a few that will struggle even more, and it will take a few years more to recover fully. And this depends, of course, on how you can stimulate the economies, in what shape were the economies before the crisis, but not least the fiscal policy measures. And in some countries, it's a challenge with the healthcare system, of course. So I think this is quite encouraging. And as I said, globally, we will see that we will have a full recovery already next year, but it's driven by 40% of the countries globally, and not least the APAC region, as you can see.
Lena, just
yes,
to make a point here, of course, some of the countries here are in crisis, not depending on the COVID-19,
no. Yeah.
right? I mean, of course,
Venezuela,
crisis,
or yeah, that's right. So that's a double. For example, you can also, the oil producing countries, including Norway, of course, they are hit twice, you could say, because you have the COVID-19 crisis actually hitting all economies, a severe situation, not least for the service sector or part of the service sector, like hotel, restaurants, travel. All these service sectors are hit hard, and they will continue to struggle. So these sectors will actually need support even during the autumn and onwards. But the industrial sector and also some of the service sector within which are more digitalized, they can even have a positive effect from the COVID-19 crisis, even though it's per se not a positive thing to have this pandemic, of course. But there are companies that have actually gained even more during this crisis. But that's true with the oil producing countries, and also instability, political instability. Look at Venezuela, for example. That's just one. And you can see also that Spain is interesting, because Spain is hit really hard. So that will be hard for Spain to recover. It will take a long time. Yes, we also calculated or put together two different scenarios. What you can see in this picture is our baseline forecast, which is minus 4.5% for the global economy in GDP. And we have two other scenarios. The yellow line is a scenario where we move into more of restrictions during the autumn, during the winter time, but we just close down in clusters or parts of different economies. Like, for example, what is happening right now in Spain, in Madrid. We yesterday heard that in 48 hours you have to decide if you should stay in Madrid or leave, because after this time you will not be able to move out of Madrid. So that's what can actually happen. So that's the scenario that we have. And if we end up in this scenario and we cannot open up as we have done, we need to go back a little bit more, but not to this fully lockdown. Then it will have a negative effect of approximately further 1.5% negative growth this year and another 2% next year. But in the longer run, if you can see 5 years ahead, this gap will narrow. So it's just a short-sighted effect if we end up in this scenario. Then we can handle it with not much of persistent effects on labor markets and companies not being able to survive. So that's very important that we do not have it for a longer time. Labor market is actually key for everything when it comes to long run growth. But if we have the other scenario where we will go back to what we had during the springtime, where we close down whole societies, restrictions put into force again to a large extent, and also disruptions in supply chains, maybe production sites will close down, and then we will have huge problems and end up with a further decrease in global GDP by approximately 5-6%, and this will stay for a longer time, as you can see in the gray line. Then we will have a long run or a long run perspective, lower growth globally. So then we will actually lose it. So that's a bad situation, and this will hurt all the global economy, of course, but in particular small open economies dependent on export and trade. And you can read more about this, because we also go into what can be done if we end up in this worst scenario that we show here. Then there is limited scope for monetary policy to help in this situation. And fiscal policy, yes, it can be used, of course, but there are many countries that have increased their public debts even more. So this is not sustainable in the long run, and it will be a long time before we will recover if this will happen. And we will also see financial markets reacting quite strong if we close down a lot again. Then the financial market will react immediately. You will see interest rates going further down, stock markets down, and exchange rates changing as well. So that will be a bad situation for us. A few words.
Let's hope that let's believe in your baseline forecast.
Yes, we hope so. But we believe in the baseline forecast because looking at all indicators, purchasing managers indices, looking into also hard data that we have, industrial production, and different both indicators and hard data. We truly right now believe in a gradual recovery. So it's some kind of optimistic view, but we need to be aware of the negative risks that we have regarding the spread of the virus. And there are other, if we look ahead a little bit, there are other challenges as well, like what will happen with Brexit. Will there be a free trade agreement or not? The presidential election in the US, the geopolitical tension, the underlying conflict between US and China, not just a trade war, it's a tech war as well. And where do we have Russia? What's happening in Belarus and all this? So there you can actually continue with all these risky factors that we have for global business. So you have to understand as much as possible to navigate in this more protectionistic business landscape. So this is just the Swedish export. I don't know how interested you are to look into these figures, but I think it's interesting to just have a look. What does it mean for Swedish export? This is our forecast, and we do our forecast and publish it for different regions. We do not go down to the specific countries, but for the regions. And this is just the goods export that you have in the table. Looking to the total export for Sweden, the last line you can see here, it's for goods export in the table, minus 6.5%, not recovering next year, it's plus 2.6. And you can see, I think we have the ones that are recovering is the APEC, our export to the APEC region. And just an example, our export in current prices, but anyway, to China during the first half of the year expanded by 22%. So that's interesting. And South America as well. But the other regions, we will not recover in our export during the next year. It will take another year to recover, or maybe even more. But if we look into the total export, we have minus 6.9% if you include service export as well, and plus 3.8 next year. So what we truly believe in is the fact that we will have a faster increase in service export, driven by investments in 5G, not least in Europe, even though we see just a slight increase in this table when it comes to goods export. But we think that there will be a stronger increase and recovery in service export. And that's also what we have seen during this crisis, that digitalization, sustainability, global supply chains are factors that are accelerating even more. We will see more of digitalization, new business models, and that's what most of you probably work with or work very close with companies changing their business models. So that's probably what most companies need to do right now, to adapt to the new business landscape. It was a trend even before the COVID-19 crisis, but it's accelerating right now. So focus on business models, sustainable business models, and a changing business landscape. In that perspective is very important as we see it. So recovery in Swedish export, but it will suffer a bit from weak global demand. 3 more slides. Do we have that time, Charlotte?
Yes,
do you
go.
think? Yes,
go for it.
I go.
Here.
Three fast slides. I don't know if you are familiar with Business Sweden's Export Managers Index. We publish it every quarter. So this is for the 3rd quarter. For the 4th quarter, we will publish it in the middle of November. And the index, to interpret this, is actually that 50 is the mark between, we have a value over 50, companies are optimistic. And if it's below 50, companies are pessimistic. But 48.7, as you can see here, is actually very close to the 50 mark, which means that companies are starting to get, maybe you should not say optimistic, but it's going in the right direction, and they are moving into a more optimistic outlook. And we have done this in 10 years. So you can see where we were in 2008, 2009 during the financial crisis, even a bit lower than we see right now, but more or less on the same level. And going back, you can see that from, we also have this downturn in the debt crisis in Southern Europe, 2012, 13, with figures below or an index below 50, and we have it now again, but bouncing back. So then if we divide this into the current situation and a quarter ahead, then you have this. So look at the blue line. It shows the current situation. So companies, Swedish exporting companies, are pessimistic if we ask them today. But if they look ahead a quarter, they are quite optimistic. It's a bit more than 50. So you can see that it's bouncing back. And this goes in line with all other indicators like PMIs, as I mentioned as well. So I think it's in line with what you can expect. And what is even more interesting is that if we divide this into regions, you can just think, all of you, if we have the 6 regions, which one are Swedish companies most optimistic about? And you have Western Europe, East and Central Europe, North America, South America, the Asian Pacific region, and Middle East, North Africa. So just think, which ones of these do you think will have an index over 50? I think you are ready to move on to the last slide. And here you see a lot of bars. Q3 is the black bars. So that was what I asked you to think through. Will I be over 50 or not? And then if you go back, the gray bar is for Q2. The orange one, Q1 this year, and the blue is the last quarter last year. I think this is interesting to see that the optimistic view, if we look ahead, because this is the forecast index. So if we look ahead, Swedish companies are very optimistic. It's just one quarter, but it seems that they are optimistic about expected demand from Europe. We don't know if this is good services. We believe it's more related to the service sector that will drive this, but it could be both. So they are optimistic. It's the same for the APAC region. Companies are optimistic. North America is going back, but a little bit below 50. It's the same for Middle East, Turkey, and Africa. And then we have South America, where we have some challenges. So companies are still pessimistic about the outlook for this region, right? Just a quarter ahead. But that's how they see it right now. And then if you just look on the gray bars, this was the second quarter where we have the most severe situation of the COVID-19 crisis. I think it was between March, April, that we had these 2 months were the worst ones, or maybe April, the worst. So if we look into this, it's changing quite rapidly, as you see here. And also going back to the first quarter, where we started off the year, we published this in the middle of February, so it was before we knew that this virus will continue and end up in a pandemic, so spread globally. We started off with a more common situation when it comes to the trade conflict between the US and China, the phase 1 agreement between the 2 superpowers, and also the industrial sector, not least automotive industry, started to move in the right direction. And there were a few positive signs, actually. So for all regions, the Swedish companies expected a positive outlook, as you can see, the orange bars. And then it's just turned, and now we are hopefully back. And if we do not see lockdowns and we can continue to recover globally, I think we have a great outlook for doing business and add value to the challenges that we have out there, not least when it comes to sustainability and the climate change. So let's hope the autumn winds will not blow too hard.
Thank you, Lena.